Hi, I'm Alexandrian, Editor-in-Chief of Brand News, and this is the Financial Services News You Might Have Missed podcast. This is where I uncover news gems that may not have gotten their full chance to sparkle, and I dust them off a little bit. I'm joined by my trusted co-host and my personal financial advisor, Brandon Galisi of Galisi Financial. Brandon, we've got a lot of great stuff to talk about this week, and I'm so looking forward to all the great nuggets that you're going to provide. So thank you.
And no pressure now. Now I've got to provide some great nuggets, or we're gonna let everyone down. You're just really setting the expectations right out of the gate here, Allie.
I knew that you were going to, so I didn't feel like I was setting you up to fail.
No, we do have some good stuff. So I'm looking forward to it. And you're going to have some great nuggets too.
Well, actually, so I'm kind of proud of myself. I did a decent amount of research for this one, so we'll see how it goes. But again, it's the same thing as when people tell you like, oh my God, the movie's fabulous. And then you see it and you're like,
Right.
May it not be that.
Yeah. No, I think it's going to be great.
So the first piece of news this week is from AtoZ Communications client AdvizorPro. Listeners of this podcast, hey, how are you? Might remember that each month for the last 2 months, we've discussed this group's advisor moves. This will now be the third month that we're looking at it, which in the journalism world goes from 2 being a coincidence to 3 being a pattern. So here's what AdvisorPro's September advisor moves showed. LPL topped both the most hires and the most departures list. This firm has consistently been on both lists. The most hires was, again, LPL at 176 advisors, then Raymond James, JP Morgan, Ameriprise, and Morgan Stanley. And on the other hand, LPL had the most departures with 157. And then that was followed by Wells Fargo, Merrill Lynch, UBS, and Commonwealth. Anyone who's paying attention in the financial advisor news knows what's going on with Commonwealth, so we'll just leave that there. We've been wondering for the last few months what all this means. Brandon, curious your thoughts.
It is interesting to starting to see some of these trends here, and even with more specifically on the outflow, because LPL, I think we've talked about before, likely to be on both lists most of the time, just because it's so massive, and it is one of the most popular independent broker-dealer platforms. But I guess, again, from my bias perspective, connecting with an independent or an SEC registered RIA as an investment advisor representative, we're constantly seeing some of these wirehouses like a Merrill Lynch or UBS. I don't know if you classify Wells as a wirehouse or not, but we're seeing more leave from there. And at least my understanding, a lot of those models are a bit more employee focused. So it's going to be interesting if some of those folks that are more often on the outgoing or the outflow list, are some of them shifting to an LPL? Not 100% sure with the data, but that's at least kind of my take, where maybe there is more of an exodus from some of the wirehouses, more stringent compliance, maybe less access to the technology that you might want to be able to use, certainly less flexibility, which again, for me, I'm like, I want as much flexibility as I possibly can have. Of course, everything within compliant, and I obviously in this independent list, probably others that are like that. At this stage, now that we've seen this for 3 months, what's been some of your takeaways from this month, or any other trends that are starting to emerge?
So I really felt like I wanted to prove something this month, because if I do this 3 times and there is no point to this story, I feel very badly for anybody who's been listening this whole time. So there will be a point. And wanting to dig deeper, I went to LPL's website. It says that it has 29,000 financial advisors. So and I don't believe LPL topped the loss list every single time, but it was high up there. So even if that were the case, so this month's in particular, they lost 157. That's less than 1/10%. So even if that happened every single month for the whole year, you've lost about 1% of your advisors. So just putting that in perspective, that to me feels like, again, like you're saying, with a firm this large, 1% is really not horrible by any stretch of the imagination. That was my takeaway on this.
And especially because they're also, I'm pretty sure all of these 3 months, they've also been on the inflow list too.
Right.
So you're right. So we were even assuming they're only losing advisors. That would be the 1%, which agreed is small. Now you factor in, like this month, I think the delta is around 20. They still were plus 20 this month. So, and I think other months they've been even more, slightly more positive. So it's not like we're seeing a mass exodus where if this was hundreds and hundreds or even into the thousands a month, that's going to be more of an issue. And I still always like to do a brief call out of what you had said the first time you brought this report up. These are cool data points to know. And especially when you start looking at them on more of a trend view for advisors to see, is there a reason that these firms are on the list? Again, I think we have at least pretty good theory on LPL with how large they are, but for some of the others that are maybe consistently on the outflow list and maybe even more of a net outflow, why is that? That would be maybe a good question to ask during that hiring process as you might be courting one of those firms or wirehouses.
Yeah, exactly. And I agree the pattern of it. I think that you had brought up, if somebody has, a big month of departures, it could just be like XYZ firm just banks moved over for whatever reason. They basically took everybody with them. Like, it is what it is.
Right.
But if you were consistently on the, and to your point, losing large sums consistently, that to me would say something. But now that I've looked into the data, and it's literally, if you were to look at it, 1%, all good.
Right. Yep. No reason to panic if you're at LPO at this point.
I don't know that anybody really was because of this podcast, but God forbid, we've solved that for you.
Yeah. Hey, good research. I like it.
Thank you. So the second piece of news is from QED investors and Oliver Wyman's seizing the bank charter moment, implications for fintechs and banks. So I noticed this one based on the catchy headline, "Are we on the verge of a new normal as fintechs pursue bank charters?" 25 saw an all-time high in bank licensing activity from fintechs and non-traditional applicants, with 20 de novo either charter filings, acquisitions, or conversions since the start of this year. So the question that the report was posing was basically, why would an innovative fintech want to become a bank, which is known not to be innovative? So apparently shifting regulations have made it easier. There is some level of concern with some fintechs about long-term risk. So I guess this is arguably diversifying and spreading out that risk. And then since some have been able to achieve this kind of scale where it would actually make a difference, there's more strategic and financial benefit from a bank charter. So all of that said, was there anything that you thought about with this process?
I guess I'm not maybe as surprised because I think we need more innovation in the bank space. I mean, not to call one particular out, but just think big banks in general, whatever the name comes to mind. Whenever I'm talking to clients, when we're looking at high yield savings accounts, which are a big discussion whenever I'm meeting with clients for, let's make sure our emergency fund, or maybe you're saving for a down payment, we want to make sure that's in a high yield savings account for that short term money. 0 times, Allie, has my recommendation been one of the big banks. And why is that? They don't offer the rates. They've got, I think the reason, they've got all this overhead, they've got all this real estate and very high expenses, and they can't pass that along. Whereas even some of these online high yield savings accounts are able to offer rates much higher compared to some of the big brick and mortar chains. And I think people are seeing that. And in fact, one company that comes to mind, even I have zero relationship with them at all, but I have a couple clients on their platform, is something called Raisin. I'm not 100% sure if that's technically a company that ended up going through this charter process. But basically what they do is they have a bunch of banks that are FDIC insured on the platform, and they're almost an aggregator of, if you're on, you have one login, but if you want to use this one local bank in the Midwest because it's offering a 4.3% rate, and that's the best rate right now, and maybe they have another promotion, if you put X dollars in, you get several $100s after 30 days or whatever the case might be. You can have one login and then now have access to multiple banks. Again, I'm not sure if they needed a charter for that, but when we talk about innovation and when we talk about client experience, or in this case, you have banking consumer experience, how much better is that? One login, bunch of access to banks. My one online bank does reduce rates drastically. Probably a lot easier if you need to then shift it over. So I hope we see more innovation in this space like this, because the end consumer is going to benefit. Me as a financial advisor, it makes it easy if I can have, hey, here's a Raisin, or I think Flourish is another one that does something similar. Hey, here are two kind of aggregators. And then let's look on the platform specifically versus trying to shop around and going to websites. What's the best one today? What's the best one tomorrow? Like all these different things. So yeah, as we talk about a lot, I'm all in favor of innovation and efficiency. And I think what this article is saying is these bank charters to some of these fintechs probably going to be a bit more innovative than maybe what we've seen, and maybe forces some of these big banks to become maybe a bit more innovative. But it's just a thought.
That's interesting. So I was thinking about it more from the fintech side, but yeah, looking at it from the bank side, I mean, you would think it's probably easier for you to acquire your innovation than it is to work within the regulatory framework / the way that you've been doing things to achieve that innovation. So totally understand why you would want to bolt that on, and agreed. We like innovation. We like things to continually get better. So thank
Absolutely.
you. Well, our third piece of news this week also had a catchy headline. This was the credit paradox. 53% of Americans are dependent on credit when 72% say the system is unfair. This was Zest AI's America's Economic Opportunity Gap report, found that 53% of Americans depend on credit for necessities like food and medicine. 65% are using credit more within the last year, and 27% say credit's harder to access now than it was last year. Seems like, especially given inflation and whatnot, it does make sense that people are leaning on credit, because if you didn't necessarily financially prepare for that. It creeps up on you. What else are you going to do? Put it on a credit card. Curious your thoughts.
I guess not as surprised that even more people are using credit. I mean, I think the biggest things in inflation, we're going to talk a little bit more about wage growth here in a minute, teeing that one up. And I think too, especially it's the younger generations, 5%, I think it was 75% of Gen Z and millennials are using more credit. And I think that was even higher than other generations. And I think a lot of that makes sense. I mean, if they're younger, if they're not able to get into a house. I mean, that's one thing when we talk about inflation, it's very interesting because there's the CPI number at whatever percent that might be, but then there's your personal inflation rate. So for example, you and I are both homeowners. Other than we might have property taxes increase, or unfortunately in my case, I have a pretty poorly managed HOA, so my HOA dues will increase. But for the most part, your principal and interest on a fixed mortgage is going to stay the same. So you might have a little bit because of those other things, but our housing cost is, we'll call it relatively fixed. For those folks that are renting, that is absolutely not the case. So their big housing expense that, again, yours and I's pretty fixed, almost zero inflation on that portion, which is a large portion typically, maybe the largest expense people have each month, that's basically zero for us. Compared to if you're renting, that's going up likely at the CPI number or something like that, even 3% or 5%, or if you're switching an apartment. I know some areas have limits on what a landlord can increase your rent on a year-to-year basis, but that doesn't apply if you leave and sign a new lease. So I think that's a big part. So if you have less millennials and Gen Zs owning homes, all things held equal, inflation is going to impact them more because housing cost rise affects non-homeowners compared to homeowners.
Yeah. I appreciate everything that you said there. I think also, so speaking to the Gen Z using credit more often, I wonder to what extent that's really just a product of, for obviously elder geriatric millennial over here, but, used to deal with cash as a kid and now very much like, if there's cash in my wallet, like it's a special day. That just never really happens. So is that just a product of like the phasing out of physical money and the ease of here's my card, just take care of it? I don't know.
I think you're onto something there too. I mean, in general, less people are using cash. I'm pretty sure even if you were to poll even the boomers, they're likely using less cash. Now, more cash than us, probably, but less cash compared to 10 years ago, very likely. There are some places now, maybe even many places, that don't even accept cash, right? So there are certain places that you literally can't even pay for it if you don't have a card. So I think that's big. Social media probably as well. I think it's maybe a bit tougher to be content these days because if we're constantly scrolling, we're seeing everyone's highlights. And even if we consciously know that, we know that everyone's life isn't perfect. But whenever we scroll through, natural human being tendency is to compare. And then that makes us more likely to want things that maybe previously we wouldn't. If we didn't have access to the internet and what everyone else was doing, I mean, would you have maybe wanted to go to that Hawaii vacation? Maybe you would have. But if you're seeing your feed just filled with all of your friends traveling the world, maybe you didn't really care about travel much, but now because of that, you're influenced and now you want to travel. And who knows what they're doing? I mean, they could be putting all of their travel on credit cards and be in a horrible financial spot, but that's not what it looks like on social media. Sure. And even along the same lines, this 23% of people are doing buy now, pay later, which clearly is becoming more and more of a thing. That's tough. I think even the food delivery services are offering that. So it's like you're going to pay for your Chipotle burrito over the next 4 weeks. Like your $12, your $15, like that's crazy, right? And more people are willing to do that.
Yeah. But it does make you wonder, especially with those kind of costs. I mean, so I could understand if you were a kid in college. So obviously this was not around when we were in college, but just saying, yeah, whatever, like $3, a week is not going to kill me. But maybe the 15 right that minute would. I wonder if there are any other reasons to really spread out payments.
I don't know. I mean, you just literally don't have the cash, or it's more of you're going to get paid on Friday. So I don't have 15. So I literally will spread it out. But again, I wouldn't even say that is a great idea for even one-off, but if you start to stack that, now you start to do a bunch of things on buy now, pay later. Now you can overextend yourself, because I know we're joking about this $3 a week for 4 or 5 week thing. But if you're doing that frequently and now all of a sudden your payments are growing, well, now if your income doesn't match that, now you're in debt and now you're paying interest on your food delivery that you very actively knew. I mean, to be fair, a lot of people are because they're putting it on a credit card, which is relatively similar. But even on a fixed payment plan, your fixed payments just keep going up and up if you're not careful.
Yeah. But so before we put a pin in this one, just also wanted to give a shout out to Angel Rich of Credit Rich and Ashanti Bentil Du, who's launched Vera. Both of them have done a lot to try to help credit become less of a thing that's used against us and more like something that we can use to help ourselves. So super duper appreciate what you guys are doing. And thank you to FinTech It's Been for introducing me to these two wonderful ladies. The final piece of news, which I have a feeling we're going to have a lot to talk about, and had a catchy headline. I don't know if you can see the theme there. Was the majority of Americans, 74%, are abandoning their American dream in response to current economic pressure. So as you could tell, the abandonment of the American dream was what caught me. This was also the Zest AI report. So interestingly, from a PR perspective, you usually don't want to have reports go out at the same time because you're literally competing with yourself to get media attention. But obviously this is the exception because I saw both of them. So catchy headlines, good job. Anyway, getting back to the actual report, it said that 86% of people say recent economic conditions and policy changes are hurting them. 57% of Americans who are making less than $40,000 a year believe they have fewer opportunities available today because of the economy. And 34% of employed Americans are worried they'll lose their job this year because of either technology changes, their firm's status, or the economy. The final downer, and literally all of these stats were just womp, 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 was that 22% of Gen Z is giving up on further education because of financial pressures. Brandon, what is going on with the American dream?
So again, I think it's very interesting. Some of the notes that I put down, again, I think especially this is hurting the younger generations a bit more. For, I won't beat the dead horse, but the home ownership thing really does, I think, cause a lot of different challenges, even when we're talking about inflation. Or, I mean, oftentimes when you hear American Dream, if you ask 10 people, even if they don't want to buy a house, they're going to say a house is on that American Dream list. White picket fence in the suburbs, or whatever the classic stereotype is. So if we see there's more student loans likely than there have been, at least compared to previous generations.
Yep.
If you have stagnating wage growth, you can't buy houses, or you even feel like it's so far out of reach that if you're just trying to survive, you're not even thinking of the possibility. It's almost, I mean, I've seen it on social media, even with different influencers, not financial ones, but influencers in general. It's almost a joke. Oh, I'll never be able to buy a house. And many people, unfortunately, have resigned themselves to that fact. Yeah. Whether that will end up coming to fruition or not, that's yet to be seen. But I mean, I think even if we just pick that one out, the buying the house thing, that's a huge goal for so many people, and has been for quite some time. And for that large thing to feel totally out of reach makes everything else feel like, well, why does that even matter? If I can't even do that, maybe that's even increasing the negative outlook. Why should I even try to improve at my job and increase my wages? I'm still not going to be able to afford a house. So I could see this kind of negative mindset just kind of piling in on itself if you let it.
Yeah. But then I feel like the argument there is, do we need to change what the American dream is? Because to your point, so if we've put on a pedestal, like you said, so I would say the same thing. It's a house, the white picket fence, there's probably a dog. There's what, like it's 2.1 or whatever children. Like that's the picture. So then do we have to just paint a new picture so that the dream is, whether it's business independence, it's being able to live a life that's fulfilled and financially you made it work, whatever it is. Do we need to just move the dream, or do we need to do things to make the dream actually attainable, or maybe both?
High level, I'd say both. Not everyone needs to buy a house. You don't have to buy a house to be financially successful. It's not the only thing. I mean, in the past, people are like, oh, it's my biggest asset, or it's what helped me grow wealth the most. But to be honest, the reason for that is because your mortgage is effectively a forced saving mechanism. Out of all the things, you're not going to cut your mortgage payment if possible. Like that's the very last thing. Bad things have happened if you're in that situation. And typically we do see real estate prices increase over time, albeit not that much, especially compared to stock market investments. But even so, even at a low rate of return, if you're forced saving, it's going to be worth more compared to you not saving anything anywhere. So I think that's where some of that comes from. So again, I don't think that's the only thing that people should be focused on. I do think they should try to figure out what is their American dream, because it's fine that we have this kind of stereotype, but is that going to work for you? Maybe so, maybe not. What are your goals? Maybe it's more of, like you said, business independence, or they own their own business, or they're able to have some level of flexibility, or it's remote work. They have more autonomy, all sorts of things that it doesn't have to be by a house. So I think each person needs to define kind of what that is for themselves.
Yes, agreed. One other point that I was thinking about, especially the last stat about 22% of Gen Z giving up on further education because of financial pressures. So personally, gotten a master's degree, it's arguably debatable whether it was helpful or not. I think that it actually was, but I mean, do I make more because I have a master's degree? No, I don't. Is it just more of that evaluation of, maybe we don't need to keep going to school? Maybe that's not really the right answer. I think you could sort of parse out that a little bit more to see what's really under there, but it could just be practical common sense.
Yeah, because I think it depends too what they mean by furthering education, right? Because is it master's and PhD programs? Because I think you're fully onto something right there, Ali. Because I think more people, in fact, I have a client who's a teacher, and teachers oftentimes are some of the easiest to run the numbers on, because oftentimes it's, if you have a master's, you get X pay bump. And if you are this age, you have this many years working, your now inflation adjusted income is going to be higher now on a larger number every single year. So it's very easy to do that math. But for others, again, especially in the business owner space, it's not necessarily, if I went to get my master's right now, that's not going to make me any more profitable. So in my case, I'm not planning to pursue any further higher education from a formal perspective. Of course, always growing, always learning, potentially adding some designations here and there. So that could be part of it, that the initial number could be misleading. Now, if it says very few are pursuing, we'll even say undergrad. Now, again, I don't think college is for everyone. I think the trades, in fact, we have, it sounds like, a shortage in the trades, and we need more folks going that route. And college truly isn't for everyone. But there are certain jobs, of course, that do require college degrees. Now, if more Gen Z is saying, I can't afford even, we'll just call it an in-state or community college, that's where I would be more concerned. But yeah, I hadn't considered that, Ali, but I would bet that you're correct here, that it's more, they've done some level of cost benefit analysis. Is it worth to spend $40K for a master's that, let's say they've decided that's not going to increase my income?
Right.
Well, then probably don't do that.
Right. Then that's sound financial planning right there.
Yeah, it's good financial decision making. That's what that would be.
Totally. So we'll say, but I would like to believe, as somebody who enjoys going to Epcot and going to the American Pavilion and experiencing what feels like the American dream in one spot, I would like to believe that it's still alive, or, that it needs to be reshaped, maybe.
Yeah. And I guess one thing too that we didn't talk about is, even when it comes to the home perspective, not to be morbid, although this was kind of a bit of a sad article, eventually people are going to age out of their homes, whether that's to nursing homes or whether that's to passing on. So at some point, some of these homes are going to be available to some degree. Like even in my neighborhood, my wife and I probably bring the average age down by about 50 years, slightly hyperbolic, slightly not. We have several 80-year-olds on our street, high 70s, very few families on our streets. And again, not being morbid, but there's at some point, likely kids of some sort will inherit that. Now, do they want to live in their parents' house? Maybe not, but they would then be able to sell it and potentially own their own things. So we keep talking about this generational transfer of wealth in the financial planning industry. Haven't yet seen that, but I think a part of it is going to be in homes. So not that that's I would recommend a financial strategy is hoping your parents pass so that you can buy a house. But at some point, that is going to be the reality, I think, for some people, and that's going to give them the opportunity to buy a house. So again, not a lighthearted take per se, but what are your thoughts?
Well, so it sounds like your neighborhood, A, needs more young adults, B, needs more children, and C, apparently your HOA needs to get fixed. So anybody who's listening from Brandon's general area, get your stuff in gear, please.
Yeah. Well, see, even speaking of financial decisions, like right when we got this house, I promise this is somewhat relevant at least. I was like, okay, because I had heard that it wasn't the best managed. I'm like, okay, I'm going to get in there from day one. I'm going to clean house. I'm going to do all this. That's me just being young and dumb. And then I got in and I'm like, I can either spend all this time, try to clean this up for maybe, HOA has increased by over $300 in the last 3 years. Not a small sum, but I'm like, or I can just put this same amount of time and effort into getting one new client per year that will more than make up for any sort of shenanigans the HOA does. So as a business owner, and I think that, this would be similar for you too, our effort, because we have a bit more of direct control on our income,
Yes.
typically I can save a couple $100 by being more efficient with my HOA, or I can just go out, serve more people, add more value, and probably enjoy my life more in the process. So that's what I've done. But if someone else wants to jump on the board and fix it, I will back you. I will pump you up, encourage you, but I'm gonna be behind the scenes.
Got it. Well, you bring up a good point, though. I wonder to what extent, so all this hopelessness of everything's very hard to afford and we need to use credit more and the American dream is dying. Maybe that is more of the answer of like doing your best within your power, which obviously, so we're saying this as solopreneurs and we do have power more to the extent than other people, but just doing whatever it is that you need to do to like make whatever your financial hopes and dreams are, the American dream, to occur.
Yeah, no, absolutely.
Which I say flippantly, as if that's just like, oh yes, and just like have an extra $100,000 in a year. I realize that that's on some level ridiculous, but also maybe that's the answer: is that you can't control regulators, you can't control the government, you can't control politics, but you can control yourself.
Right. And yeah, I think oftentimes we hear, oh, just cut, budget better, stop spending as much. And sure, in cases that's going to be good advice. But I really do think what doesn't get talked about as much, also, again, totally acknowledge this is way easier said than done, but figuring out ways to increase income. So we just acknowledge we have it a bit easier. We can prospect more, ask for referrals. We can pull all sorts of levers. But even for folks that are maybe in more of a corporate setting, are there certifications that aren't necessarily formal education like a master's degree, but is there a certification that makes you more valuable? Or are there ways that you can work your way up in the company by just being excellent at your job? Or maybe if you've been at your same company for a while, when's the last time you looked at other companies in your industry? And again, maybe you're relatively content, but you look at other jobs and maybe one's offering you 20K more a year for something similar. And then you can have a couple different options, either take that or even bring that back. Hey, I'd love to stay here. I love this culture of this team, but you've got to pay me more. Here's an offer that I have on the table. So I think there are some ways, which again, I understand this is way easier said than done, but I would be focused on how do we figure out the income lever, be smart with expenses, be wise, but how do we fix the income lever? Because if our income goes up, all things not equal, I'm going to be in a better situation.
Yeah, sound financial advice. Thank you.
There you go. Yeah, making more money. Yeah, brilliant. That's why they pay me the big bucks, Alan. Make more money, you'll probably be in a better place.
So thank you, as always, for delving into these, and especially these last two weren't exactly those things that you want as you're heading into a Friday and like looking to gear up for your weekend. But thank you for thoughtfully attending to all of them.
Yeah, absolutely. No, these are great. And I just hope people have more hope. I think when people have more hope and they see there are maybe some levers, what can we control? I think that's the purpose of this. Even like, yes, the data right now suggests more negative than positive, but if people can just catch a glimmer of hope, that really does reshape the perspective.
Absolutely. Thank you.
Yep. Thanks, Allie.